Let's quickly pull up a Zee Entertainment on the screens and see what that counter is doing in trade. The stock was seeing cuts of almost 4 to 5% right now as well. 2.5 to 3% lower. Now, 40% of the shareholders have said no to the warrant issue in terms of the vote. And the promoter funding plan has been rejected by the Zee investors. Zee resolution has fallen short of majority. Let's get in Jinesh Joshi, research analyst at PL Capital, to tell us more. Jinesh, the entire saga with regards to Zee Entertainment, what would this actually mean for the company according to you?
Fundamentally speaking, does this rejection have an impact on 1Q earnings? I think the answer is no. Even if you talk about FY26, does it have a fundamental impact on earnings? The answer is no. Definitely, the promoters thinking of raising skill in the game was basically seen as a positive step. But obviously, smart money was thinking otherwise, and this resolution has not gone through. But at least, as I mentioned, from a fundamental standpoint and from an earning standpoint, in 1Q and FY26, there's no concern as such.
Hi, Jinesh. Agnidev here, joining in from NDTV Profit. Thanks for taking our questions. So I would like to take this a bit further. So I wanted to check, according to you as an analyst who's covering the stock, clearly you are very bullish on it with a 22% upside on your target price. But could a fundraise have changed things for Puneet Goenka in terms of a board seat? We know he was ousted in 2024, and we know that there's an effort from the promoters to get a board seat. So would a promoter fundraise where their share goes from 4% to over 18% have changed things with the way how they can push for a board seat?
Could have been. But if you look at the overall situation, Zee already has about 2,400 crores of cash on the balance sheet. And if the promoter warrant conversion would have gone through, additional 2,200 crores would have come into the company, right? And out of that 2,200 crores, the plan was to invest about 1,000 crores into new businesses like user-generated content, live events, etc., and 700 crores into M&A. But I think the broad thinking with respect to the public institutions was that you already have about 2,400 crores of cash on the balance sheet. Why not deploy that first? And secondly, you also have the FCCB approval, wherein you can draw about 2,000 crores. 200 crores has been drawn. Only one tranche has been drawn. So sufficient liquidity was there into the system, and maybe that is the reason why the rejection has come through. But yeah, definitely from 4%, if the warrant conversion would have happened and the stake would have gone to 18%, definitely the board dynamics would have changed.
So you're saying board dynamics could have changed if it had gone to from a 4 to an 18%. But the other point that you have raised, and again, that was one of my questions, they have cash, the company has cash with them, they have an FCCB approval. Why then jump in with a promoter-led infusion when the timing in the market is not really favoring the promoters, where investor sentiment is not clearly in favor of the promoters? And they have given a breakdown of the funds, but they have said that the time it will be deployed in will be 24 months after they get the money, and there's no clear breakdown of which projects exactly, where exactly will the funds go. And is that not something, a point of concern according to you?
So I think, basically, if you look at the corrigendum which had come out after they came out with that notice with respect to EGM, the breakdown was definitely available. So for instance, as I mentioned, that 1,000 crores will go into new businesses like user-generated content, or for example, live events, animation, etc. And 700 crores for M&A. But as I mentioned, they had sufficient cash on the balance sheet, and maybe that was the reason why the existing shareholders, especially the public institutions, they were not too convinced about the preferential allotment thing, and maybe that is why the rejection has perhaps come through.
Right. I would like to now ask you about the corrigendum that you have brought up. So earlier we were told that there would be two entities, one would be Altitis and one would be Sunbright, and they would put the money. But the corrigendum came in and suddenly changed things. They said that the Mauritius-based entity will be infusing 99.9% of the funds, and of the Mauritius-based entity, one of the beneficiaries was Puneet Goenka. So essentially the money is coming entirely from an entity which ultimately benefits Puneet Goenka. What was the need of a corrigendum where, we saw the breakdown? So Altitis is clearly sidelined. It's contributing 0.08% to the fundraise. So why do you need an entity based out of Mauritius to put in the money into this company where it ultimately benefits Puneet Goenka? And to build up on that, why should the money come from a Mauritius-based entity? Subhash Chandra has come out and said that the money is coming from overdue pays by state governments, which includes payments for infra projects. He said this in an interview to another TV channel. So why then route this money through a Mauritius entity and not through an Indian entity?
See, that's a difficult question to take. And see, honestly speaking, that could have been perhaps one of the reasons why the fund approval has not gone through. So I would not read too much into it, because what has happened at this point in time is that even if that approval has not gone through, your earnings impact. See, at the end of the day, what matters the most is, will this decision have any material earnings impact on the company at this point in time? And the answer to that is no. Obviously, they were trying to kind of shore up cash in the balance sheet, given the fact that you have two big names which have merged very recently, and you need cash pool, especially on the sports side. If not, say cricket, I mean other regional sports was also one of the avenues which they were thinking. But given they are stuffed with liquidity, and the fact that the public institutions perhaps were not fully convinced, you saw this not going through.
My question is this good news or bad news that the capital infusion by promoter has been rejected? Does this actually probably now open up a room for an acquisition for a Zee Entertainment?
See, I mean, this decision, effectively, we should also think from this perspective, that this decision is taken by the minority shareholders of Zee themselves. This decision, for example, you don't have promoters going ahead and buying Margo and then the shareholders ranting about an unrelated investment being done. This is something that which you, as a shareholder of the company, have decided that maybe the vote of confidence at this point is not required. Whether there are chances for buyout or something like that is something very difficult to preempt at this point in time. So I would not like to comment on that.
Short question again. So if the promoters have gone ahead and said that, I mean, a promoter fundraise has been denied by the shareholders, what then is the next step? How else can they raise money? And will you still be bullish on the stock, given the people are very worried about the governance and the promoter push?
Sure. So see, I mean, vote of confidence can also come in other form. For example, the 25% of the warrant conversion, which they were to kind of make it upfront payment into the company. They can also buy shares from public market, but that would mean that money will not come into the company, but that vote of confidence which they wanted to give to the street, it could come from that angle as well. And again, if I talk about, I mean, I know I'm speaking this for the third time, but ultimately what matters is how are earnings going to move. So for example, if you look at their FY26 guidance, they are guiding for an 18 to 20% EBITDA margin, about 8 to 10% ad revenue growth, a free cash to PAT conversion of about 1.2 times, a viewership share of about 17.5% in 26. So if I think if they are able to achieve these kind of numbers, so for example, our FY26 EBITDA margin is about 18%, which implicitly assumes that the ZEE5 EBITDA loss, which was at about 510 crores in FY25, comes to about 210 crores, and you have the plain vanilla EBITDA margin of the linear TV business at about 23%. I think if the delivery comes at the end of the day, what matters is what kind of earnings delivery comes in 26.
So basically, Jinesh, what we are saying is the news does not really impact the earnings as of now, so nothing changes on that front, and your view remains the same with regards to Zee Entertainment so far. Completely running out of time, but thank you so much for joining us on NDTV Profit. An interesting conversation.